Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 28th day of May, 2015, and this is the Daily Report for Gold and Silver. Nominal move to the upside in the precious metals markets, nominal move to the downside in the equities markets today. We'll talk about the dollar in a second, but first to gold. Currently trading up about $2.5, 11.8810. That is our current print with a low of 79.60 and a high of 92. So we've had a pretty decent range on the day and an interesting candlestick forming from that. We'll get to that in a second. Let's take a look at silver. Silver also up about 3 cents on the day, 16.68, the low 54, the high 77. So if you recall from yesterday's show, I laid out my short-term, interim, and long-term forecasts. More importantly, I laid out the different models that we're currently looking at that are what we use, the studies that we're using to come up with these models and these forecasts. The reason behind that is when the market is trading in such a defined range, I really want to give you, the subscriber, as much information as I can arm you with, so that during the day you can make your own trades or decisions based upon short-term and interim-term moves within the market. Now, if you recall from yesterday's show, what we talked about was the fact that very, very short-term, what I am looking at is a potential for the market to rise, but not really rise all that much. It was based, the amount that it was going to rise is based upon some Elliott wave counts, the fact that we might see a pivot point or a turnaround in the market. And when you consider that this market has come down from about 1230 all the way down to our current price coming at a low at around 1180, we've seen a substantial decline within the marketplace itself. And so that pivot point is absolutely important. What is more important is that I believe that we will see the market rise that pivot point, but I think that that's going to be short-lived. Let's first look at the rise. This is our MACD. Again, this is very, very short-term studies, and the reason I've moved to such short-term studies is that to me it is essential when we are trading within such a narrow range. But we talked about the fact on the MACD, we absolutely got our hook right here, and that really does signal the market with a potential pivot point in it. We also looked at momentum, and momentum hasn't gone to the positive, but you can see that the momentum has really, really genuinely moved up, basically neutral right now, so we would look for it to come up here. And then lastly, let's look at our current Elliott wave count, and what our Elliott wave count is looking at. And again, this is a very, very short-term count because the larger term count that fits within this is looking for lower pricing, but I think we're going to see this rise first. But as I said, in essence, what we want to really discern right now is the totality of this wave 3, which would be about this in length, and then look at anywhere between 50 and 75% as our potential top within the market. So we should see this market move into a wave 4. And as I said yesterday, the wave 4 based upon a move of about 50%, which is standard Elliott wave modeling strategy, 50 to 75% on this corrective wave here. What we might see is a market dip or move up a little bit, hit this, and then it would conclude this wave 4 right here. And then we would go into our 5th wave down. Again, this is a very, very short-term study. So if we take it out of the realm of extremely short and go to interim, our count is still looking at the same variables, but we're now looking at our daily or half-a-day candlesticks, I should say. And on the half-a-day candlestick, take a look at the range that we have had. Very, very a shallow difference between the open and close. We'll absolutely want to look at it daily in a second. But absolutes between the open and close, we've had these almost doji-like, but they're closing right in that same area. And what we're looking at with this kind of potential is it is giving us the indication of a potential pivot point in the market. So to really give you the most comprehensive of our intermediate call, we go to the daily chart. And you can see over the last couple of trading days, there's absolutely no doubt, but we've had these pivotal candles, these doji candles beginning to appear in the market. That's genuinely a sign of consolidation, not necessarily a pivot point. And the reason I say that is you can have the market basically trading lower, it could be trading higher, and then it consolidates for a little while. It moves sideways, and then it goes to the next tier or stair step, something like this. And you get it on the way up as well as on the way down. In other words, you get these periods of consolidation. So consolidation occurs at a pivot point, but it also occurs at what I call a resting area of the market. So when we look at this, and we take into account the other studies that we're looking at, we certainly can see that we were in a wave 4 here. This is our 1, 2, our long wave 3, our wave 4. And when you look at the subcount within that, if we're in a wave 5, we could easily be seeing this as 1, a little clip up is 2, then 3, 4, and 5. So the fact that we're in a wave 5 count on the interim term is simply pointing at the intermediate count as opposed to the minor count that goes behind that, and of course the major above the intermediate. So that's where I don't want confusion to come in, but this is really the interim studies that we'll want to look at, and of course with the weeklies we look at our majors. But so as I said, I do believe that we'll see the market clip up just a little bit, but realize that that all is falling within this larger context, and the larger context, traders, I still believe is lower in the market. So traders, what about silver? And I told you that we would try to spend some time going through the same type of count with silver. I don't believe we'll have that time today. We'll begin that tomorrow, but I do want to take a look at silver today to kind of fill you in on my take on the longer count right now, and then we'll do the minor and intermediate count either tomorrow or on Monday, as this is a shortened trading week and we're already at the close of the week. But in essence, the way that we're looking at this is we've obviously been in a long bear count as this market came down from about 35, 36. And the way that we're looking at it is a 1, 2, 3, 4, long wave 5 down, and now we're in an A, a B, a C correction. Now, in terms of a straight Elliott wave theory, if in fact the conditions that were present during this bear count here are still prevalent within the market, we will then go into, from this top, another 5 count down. 1, 2, 3, 4, and then a final 5th. And so when we conclude C, we're probably going to see the market move down, and that's a very, very similar count to the longer term count that we are currently looking at in gold. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.